Iorio is described as a serial entrepreneur. He was working in decentralized technologies back when Carly Rae Jepsen first came on the scene with Call Me Maybe, and today, one of them still has a viable career. Now, with that in mind, after co-creating Ethereum, it seems Anthony's career is largely spent explaining how powerful blockchain is and how it will be. From the first Canadian Bitcoin Expo in 2014, to his time trying to convince the Toronto Stock Exchange to embrace the future in 2016, to his time today on the stage, Anthony is not only speaking but listening to startups and putting his fiat currency where his crypto mouth is. Ladies and gentlemen, Anthony Iorio, CEO and founder of Jaxx and Decentral. I feel very much overdressed based on this conversation.
That's the way it usually works, and the crowd usually is much overdressed as well, I see.
Yeah, you can always tell the money guys because they're the ones with the ties.
That's right.
All the ones with the ideas, they aren't even wearing collars. When I tell people I've been on the internet since 1987, they look at me like I'm lying. The internet couldn't possibly have existed back in 1987. You've been in blockchain since 2012. How did you get to just that point in wrapping your head around the idea and what you could do with it?
Sure, so I've been a technologist all my life. I was joining you in the very early days of the internet. My first company was creating websites, early 90s. I was building computers when I was about 8 years old, robotics camps up at Seneca College, up at King Campus in King City. And when 2012 came around, I'd been spending a couple of years really digging into economics and looking to see what had happened with the housing crisis and the banking crisis. And it's always good to see the people that potentially had predicted what had happened. And I was looking at a lot of the contrarians and the ones that had actually saw that coming. And I was listening to this guy named Peter Schiff, who's an economist, and he was getting laughed off the stage in this video on YouTube I saw that was called Peter Schiff Was Right. And he was on CNN and Fox News and a lot of other media outlets, and they were just laughing and howling at him about his predictions about the housing crisis being problems in there and problems with what's gone with the banks. And it's a certain type of economics called Austrian School of Economics that I really started digging into and really learning about what money really is. In 2012, when I first heard Bitcoin, it was literally that day that I got it. A lot of people will say that it takes them some time to actually grasp it and actually figure out what it is, and that people just dismiss it. But taking my technology background and taking the economics background that I'd been involved in the last few years, meshing that now with the technology that I realized right away enabled me to be my own bank, enabled me to be in control of my life, and enabled the technology to actually work to remove a lot of the intermediaries and third parties that really are usually involved in providing trust between individuals. Our lives and every basically system works on trust. And we're so used to giving that trust out to third parties. And I saw right away that technology can now replace the need for trusted third-party entities. That day I bought my first Bitcoin, $9.73, and didn't look back from there. I didn't sleep for days, didn't sleep for weeks, and then looked for a community. And I didn't find one, so I ended up creating it myself. So that's the initial story about how I got into it, and I haven't looked back.
July 30th, 2015, Ethereum goes live, first 12 million pre-mined coins. Tell us about the story of the moments that led up to that, because I can imagine there was a fair amount of stress, and then you flipped this virtual switch, and then what happened after that as well?
So let's first clarify that it wasn't pre-mined.
Okay.
It's a big no-no in the space, or at least it's a different way of doing it. We actually did a product sale. We sold a product to the masses that once the product launched, their wallets were filled with the currency. So, sorry, the question that was following that was?
So tell us about, as that went live, and the environment in which you found yourself in, and what happened immediately after that?
So it was a great win. It was, we started the project in the end of 2013. It came out of my place called Decentral at King and Spadina at the time, and a gentleman, Vitalik Buterin, who I'd gotten to know for a while. His concept, his idea, my bringing together the team, the funding to actually get it off the ground. So to have something come out at that time in 2015 was just, it's an amazing feeling to create something that actually is more than just an idea. It's an idea when you create it, when you actually execute it and it actually comes through and you see what happens with it after that, that's just an amazing feeling. And something that, really be honored with the team that did it and all the people that put this whole thing together. And it's just super to see where it is today.
So after the big win and the coffers fill up, and this is a good question because your parents are here. Did you buy mom a car? Does your dad even know what you do for a living?
They definitely do. In 2012, when I got into it pretty heavy, I got them into it pretty early as well, and they understood what was going on. I've always been the person in the family on that side of being able to identify things and do it, so they believed, and they're still quite involved in that space. My whole family is. My brother just did it. They just raised $6 million for a project called Musiconomy, which is changing the whole way that rights and distribution for artists work. My sister is the editor for Bitcoin Magazine and BTC Media. And my dad's done quite well in this space for himself. So, yeah, they're involved, and they definitely know what it is.
So it's just a family-run business.
Well, I run my businesses. We're all involved in the ecosystem, though.
Every entrepreneur, of course, needs to overcome setbacks. June 2016, the DAO exploit, decentralized business model for companies, open source business, vulnerability in their code, 3.6 million, Ether gone. The decision, fork Ethereum into two, get back the coins. How did that day go?
It was interesting. I actually spoke to Vitalik that day, and he's letting me know something's happening here, something's going on. I put money in the DAO myself, and it was really a mix of two things. It was a battle between two things of immutability and consensus. Two prime things that bring this technology forward that are like pillars of these technologies. One is that transactions should not be able to be reverted. Code is law. Nothing should be too big to fail. Along with consensus and people agreeing to how changes should be made. And I'm always, if I had to pick between the two, for me it's immutability. I think that's the most important thing. And I think the consensus in that thing was basically, it ended up being a too big to fail. And the majority of the people, a lot which had skin in the game, and I had skin in the game as well, decided that they wanted to give the people's money back. And I was against that. I would have been happy to lose the money just because that's just code is law. It's what we promoted as Ethereum, is that it's unstoppable applications. And I think it opens a can of worms when you can actually see there is a get out of jail way for things. So it happened though, and I go with it. It happened, there's nothing I could do. I got my money back from it. But no, I prefer the mutability, and that's what happened when, and Classic has emerged on that, which is more of a focus on the mutability. But consensus did it, move on, and that's what happened there.
You don't strike me as the kind of person who dwells on past issues.
No, not at all. I try to live in the moment, not think too much about things way in the future that I can't change, and try to create value, try to stick with my principles of not taking people's money, of not holding people's money. Like, I create wallets that don't hold people's money. The actual users are in full control of their assets, and that's the way that I think Xing should be. I think people should be in control of their lives, every area of it. And I think there will be a paradigm shift, and the technology is here that will enable people to do that. So no, I don't think dwelling on the past and really looking too much in the future. I think focus on what we do here and now. That's what I try to do.
What is that paradigm shift as you see it when you talk about a trustless economy in a world that largely still relies on trust?
So the trust is going to be pushed off to technology and mathematics. That's what these technologies they provide. They provide a trust layer that you can interact and deal with individuals that you don't need to trust, and the technology fills in that gap. So I prefer the systems where I don't have to trust the whims of individuals. We all know how the code can work, and I'd rather follow that.
That's a long tail scenario, though. How do we get to that point from here when we've built an economy, a society, a culture based upon the idea of I know you, I trust you, versus I don't need to trust the person I've never seen before?
It's definitely a long tail, and it's something that I've been pushing for since 2012. I think it's allowing people to realize that when they are in control and there's open services and things that can be built around these open source technologies will give them choice and give them advantage. Things will become cheaper, they'll become faster, and they'll become better. You'll remove a lot of the non-value added participants from the equation with a lot of things. And I think that paradigm shift will come. I think there'll be a time where we can be in control of our lives and not have to rely on third parties or giving away all our information that other people can monetize, and we'll have the opportunity to monetize ourselves. It will take some time, not sure when it's happening, but that's going to be my goal, to get it there.
So you've got no deadline for us, you've got no sense of this is what by this point where I'm going to be going to the moon and it's all going to be a trustless society.
I try not to give advice or make predictions.
You won't play my mugs game. The Ether inflation rate last year was 10%. You expect to get that down to about 2% with proof of stake as the method of distributed consensus. How critical is reducing inflation to gaining acceptance in financial circles?
I don't think it's that important. I think it's hard to tell with cryptocurrencies how much is actually still in circulation a lot of times. So the way that we did the model was actually there's a certain amount that's actually produced of what we sold in the initial product sale, and that's the way that we identified it was sell as much as we want, and then every year we're going to make 10% of that come forward. I don't think it's that important. I don't really think too much about that. I think it's important to have still some coming out because you might lose big chunks. You never know what's going to happen. And I think Bitcoin with a $21 million cap maybe didn't take that into consideration too much, but I don't think it's that big a deal.
Within the financial circles that I travel, the inflationary issue that they are more concerned about is Bitcoin, by example, one day can be $1,000 more than the previous day, the next day down by $2,000. Do we need to see a leveling off of volatility in cryptocurrency generally before we get wide-scale adoption?
I don't think so. I think that these things are very new technologies. They're very experimental technology, and over time things will stabilize, just like you get with like stocks, early stocks, and things like that. It is a thing that people talk a lot about, and they go, "I don't want to get in here because I can take a loss the next day." But I look long term. I'm really not in this for the short term. When you have a means to transmit value globally, instantly from one person to another in the way that you do an email, and you could open the doors to billions of people around the world to get access to financial services in the way that Bitcoin can enable and other cryptocurrencies, I don't think that's an issue. And I think that it's going to grow, and I think people are going to realize the value of it. And I think that more and more people will start using it because of its fixed and limited supply nature. I think it tends to go up.
What's the biggest hurdle you're addressing right now? Something you haven't resolved yet, but you know you're going to kill?
Let me think about that for a sec. I don't know. I think we've got such a great path in what I do. I build the tools that enable people to be in control of their lives. We create the browser. We're creating the way that people manage and move digital assets, and very in tune to what the browser did for the internet. I identified that the wallet is the same thing as the browser. And in 2013, I started building wallets. I took a break when we did Ethereum, and then right after, I continued to make the interface for this entire ecosystem. At Jaxx, we support 60 different cryptocurrencies. We have hundreds of partners, leading firms in the space from BitPay to Coinbase to Kraken to all these guys that we're working closely together to create a single interface that the masses can actually understand and use the technology. And I think that's what's really missing in the space, and that's the actual thing that we're filling out right now. We've got 750,000 users right now. We did $1 billion in transaction volume last year through one partner, and we've got hundreds of partners waiting to come online. So right now it's very segmented from project to project. Our goal is to bring the entire ecosystem together and get everybody moving the sector forward, working together, and that's our goal, is to create that interface, that browser, that thing that the masses, my dad, can start using the technologies.
Well, you mentioned your dad by example. Maybe not your dad specifically, but many of us have a parent who we can't wrap our heads around blockchain itself. For the benefit of all of us here who have to go home at some point and explain to a spouse, a partner, a parent, what I did today, how would you explain blockchain?
So I'd like to start with what the problem was solved. So when you have a disruptive technology, it's usually solving something. In the case of Bitcoin, it solved the problem of being able to have something digital, something that you could prove ownership of, and something that couldn't be duplicated. Before Bitcoin, everything could be duplicated, and it works great for things such as information. The internet grew because you could move information. You can create a copy of something, emails, and send to someone else, but it doesn't work well for a currency. It doesn't work well for other digital assets, such as a deed to your home or a digital will that you might have, where you don't want to create copies of it. You want to improve ownership and be able to move it from one person to another. That's a disruption that happened. Bitcoin is changing financial systems. Technologies like Ethereum and smart contracts are going to disrupt and work with or actually change. I don't like the word disrupt too much. Hopefully they're going to change in a way that's going to give people more power. It's going to get involved in areas of insurance, of law. Smart contracts is impactful on many, many different sectors that the information couldn't be. We're moving from an age of information, I believe, to an age of value, and it's much more important than the internet. What is coming up these days is value is much more important. It impacts so many more sectors, and we deal with it all our lives. And I think the internet brought the pipelines, and now that you can move value without needing third parties, do it peer-to-peer, is just going to be something that's going to be extremely game-changing.
That game-changing nature of the underlying technology suggests that it's not something you can simply wrap your head around over a dinner conversation.
Oh, and I mean, trying to wrap my head around how the internet works is not really something that I would have to explain to someone. I think it's going to be that the biggest thing with something like Bitcoin is that the opening of the doors to the people that don't have services and can't enter global economies. I think there's going to be a leapfrogging in a lot of developing countries who don't have to worry about the financial services trying to maybe fight these things, instead of working together and seeing how we can all improve lives and improve the way that people do things. So I think it's going to expand and grow just like the way that the mobile phones kind of leapfrogged landlines in places like Africa and other developing countries. So I think there's going to be a growth. It's more people coming on board, and I think it's going to create more value, and I think it's going to create more competition. And I think countries need to understand how they can embrace these technologies, how they can educate themselves with it, and how they can understand that they can become these sectors of growth and change, entrepreneurship, that I think each country is going through or wants to do, but just doesn't understand it and hasn't been broke down and educated right. So education is key, and it is my goal to help Canada move things forward and hopefully figure out ways that we can take hold of these sectors, create jobs, and create some amazing things.
As a tech guy, one of my favorite giggles in Downton Abbey was when electricity came to Downton Abbey, and there was a lot of fear about it. They didn't really understand it. Eventually, electricity just became something that existed in our walls. We don't think about electricity.
Just like cars.
Just like cars. The internet had that same experience through the course of the 1990s. There was a time when we were saying at some point you're not even going to think about it, it's just going to be there. Do you see the same with blockchain as a foundation?
Yeah, we're going through the exact same things that many technologies go through. I mentioned the cars thing because they used to treat these cars when they came out as these beasts that were on the road, and they created these crazy rules to have people go ahead and flag things, and it just, like, these things are no good, and you see where we are with those now. I see the space that I'm in right now, this blockchain space, as a space that people want to get into, but they don't know where to put their money, and I think there's a lot of fear of missing out on things, and I think there's a bubble that's forming, and I think it's been forming for a while. I think that it's going to be a time where this bubble will blow up. I think the non-value-added participants in the equation will be pushed aside, just like we saw with the dot-com bubble, and the true value companies will really emerge, and that's what I'm trying to do. I've identified that the interface is the wallet. I create wallets in a way that people are in control of their lives, control of their assets, and I support the entire ecosystem with 60 projects, soon to be hundreds of projects, in a space that I think is growing and will be massive.
Where else do you see value add? How do we avoid the pets.com style .com disaster? Value add is more than just Jaxx. What else is it?
I think a lot of it is, for me, is I said I don't take people's money. I like to create value. I like to use my own money. I think there's too much money floating around, and I think that it doesn't lead to the best quality and projects that emerge. I think when you ask people for money, you get into a massive debt, and I think you can't focus on a lot of what you need to do is execute and create that value. So I do encourage people to really try to see where they can fit into the space. Find people that you actually know in the space that can help you to accelerate your knowledge of it, expedite what you're knowing so you're not making common mistakes, and really try to put something together that's under what you do and that you can create value and see what gaps need to be filled. So I really wish that there wasn't so much money being raised right now, and there wasn't so much basing on a single idea. People are putting hundreds of millions of dollars into things. And I think that's going to leads to the problem. So I don't know how we can stop people from taking other people's money, but it's what I do is try to do things myself, create value, get profits, grow it, and I'm hoping to last the test or stand the test of time with what I'm doing.
As a Toronto boy who's made good around the world, does Toronto's tech community have the same inferiority complex when it comes to Silicon Valley that, say, the restaurant industry here has for New York? How do we convince entrepreneurs and startups to come here?
The first thing comes with having clear terminology and clear guidance from regulators. A lot of companies in my space are moving outside of Canada because they want to do capital raises, they want to do things, and they're just uncertain of how they can do it here. It's a big problem. I don't have that issue for two reasons. One, because I don't take capital, and two, because I don't hold people's money. So in our wallets, because we don't hold people's money, we're not regulated, we never take custodianship. That, tied with not taking or raising capital in these ICOs, enables me to stay here, but that's not the average person. People need to do those things in our space, and there's such unclear guidance right now that they're going elsewhere, and we're not going to be able to attract the people that we would like to, I think, with that guidance and not having that. So I really do think that it's about educating regulators, working with them, and hopefully we'll get that guidance that will enable us to attract and maintain our foothold on people that actually are creating value here.
Anthony, thank you so much.
Thanks for having me.
Anthony Iorio.